Yes, hello traders. Welcome back to our morning show, your morning show in USA. It's afternoon, at least here in Germany, the weekly trading show to kick off your investment week. Today with me, my name is Mike Seidel. I'm portfolio manager and Dow theory market trader. Also here today, Mr. Rudi born, better to announce or to speak for you, Rudi. He's asset manager and at the moment in Frankfurt, as I know. Then Gilbert, our founder of the Traders Yard, and trader too, and Mr. Martin Gersch. He's also portfolio manager, private trader, and coach for the market. So we are four guys today, and I will start for you the week with a view to the ES, the S&P 500, and a few words around the markets. What's on the list for today? We have Yellen implied higher interest rates. Could be good for the US economy. This is one thing, and the markets are not so crazy to sell off. So this is maybe a good sign for the preparation for the markets. The second one is Mr. Biden's plan for a I have to read the $6 trillion budget infrastructure program. 6 trillion. It is so immense. I can't imagine this number. But the good thing is it should be approved during the next weeks. Maybe we will see some indications for the approval this week, maybe today or tomorrow. And what's in this package? It contains further spendings for infrastructure and defense, education, housing, and healthcare. That means a lot of money will flow into the markets from the federal side. It can trigger the inflation for a while, but it should be also very, very good for the US job markets. And we were talking last week about the weaker US dollar. This program has the power to bring US dollar back to old strengths. We will see what will happen. The markets will show us, and with these words we will switch over to the risk disclaimer. At first, please have in mind what you can read here. Future stocks and option trading involves substantial risk of losses. Clients may lose more than their original investment. The highly leveraged nature of futures trading means that small market movements will have a great impact to your account. So have it in your mind. What we say here are just informations and not the informations that you have to buy or have to sell. What we show here, that's what you should know. And now you should know what the markets are doing. And this in mind, I will switch off my camera and show you the completely view to the ES. So what we see here is the future of the ES here in the xTasyTraders trading platform together with the Dow package. The Dow package has the opportunity to show you some different trend sizes in the market, show you the directions, and you can you can use this package to produce your trading signals and scan the markets. So this maybe we will talk about later in one of our webinars more to the package. But before we should see what the markets are doing, and the ES is quite strong at the moment too. And I was quite happy to see what happens last week after the NFP on Friday. They were quite good number and will indicate that the US job market is on the right way for the future, and the market too. When you see where we are at the moment, a little flag over here. Let me show this just here. This is the flag after this good increase here. It's a good bullish sign, and we had the break out on Friday here. Now it is very important and crucial to see that the markets will find more buyers, that we see follow through day here in the ES, so that we have the buying power on the all-time highs and might influence more and more stocks to climb above the 50-day moving average and bring the stocks up. So it's a good time to search for new long trades. For the next, I guess the next few days will be quite good for trading. We just have to see what the market is doing after the Friday. It's not seldom the case that after a Good Friday we will see a holding back Monday and then a rally from Tuesday on. This is what we should keep on eye in the markets, but for the stocks we should have a look to good long trades. We have some good opportunities today. I will announce Gilbert has Cost and AIZ, Martin has NIO and ALB. I'm not sure what Rudi will bring to us, but we will see it soon. And I will talk later about TGD and 3D Systems. So these are my numbers for today. And yeah, these are the first words from my side, and I will hand over the screen to Martin, and Martin will talk us about yeah, what's NIO and ALB, would I say, right, Martin?
Yeah, that's correct. That's correct. So let me just
now
grab the screen.
Yep, here we have.
Okay, so here we are. Well, today let's start with Alobemarle. I'm going to load the chart. Oops. There we are. Okay. Okay, at first I have a quick glimpse at the financials. What we can see is that revenues are quite stable in terms over the years, and also in terms over the last 4 quarters. We have quite stable revenue, a little bit more than between 700 and around 900, 880 million each quarter. We see that in the last 4 quarters, ALB was able to create big earnings beats. The last one was really outstanding. Market expected 80 cents of profit per share, and we reached $1.10. So this was quite an exceptional quarter, and we can see that even while the pandemic was in high levels, we can see that this company did bring good earnings quarter after quarter, and so that's a sign for good stability of earnings, actually. And when we take a look at the chart, we can see, let's like always start with a monthly chart. We can see that we have quite strong monthlies. I'm going to take a little drawing tool here so that we can take a look at the last sequences. Yeah, what we see here is in the monthly chart really a stable uptrend, even though of course the stock was under pressure for quite a long time. This is from 2017 to the end of 2019. Stock was under pressure, but if we take a look at the overall chart, at the overall trend, we can see that we still have a sequence of higher highs and higher lows on the really long time frame. So investors had to be patient for several months here, but it got paid off, and we saw new all-time highs recently, several months ago. And on the weekly chart, we can see, let's take a look. So this is the weekly chart. We don't need the commercial positions here. Okay. We see that the RSI is near 70. This is quite nice. We're at 64 at the moment. RSI on the weekly is rising. We see that the price is way above the 10-week moving average. I like this as well as a good sign of a good trend. We see that the market did make a higher high recently in the last week, and we had a breakout of this small triangle here. That was quite nice actually, and the breakout was with a lot of momentum. We have a strong weekly close in the last weekly candle. and we are nearing all-time highs. So, and that's what I'm expecting of this stock. The retracement we saw here was quite big. So in terms of percentages, we had a retracement around 30% here from January 21 to March 21. This is quite a big retracement for such a small time frame. But what I really like is where the buyers stepped in. Let's make this a green one here. So the buyers stepped in a very important place. This is like a buy zone. This is a support zone, a buy zone, where several months ago buyers stepped in quite heavily. We see a lot of momentum here, big up move, and this was actually a retest of this buying level. I really like this one. And from here on, we are now again in this situation. We do have a stable uptrend, higher highs and higher lows in this market on the weekly chart. So on the weekly, everything looks quite bullish. RSI looks bullish. The sequences are bullish. The trend is intact. We are above the 10-week moving average. I really like that. And on the daily, it's even more nice. We see here something like a bull flag in this part here. Quite nice. Let's see here. This complete part here is like the bull flag I'm talking about, and we are in the process of breaking out of this flag to the upside. That's a very important level. This level here is around $172. We had a very important high in the market here. So, and we also have this low around here. So the 172 area is really important for ALB, and we saw this this bullish break of the 172 on Friday. This is like a weekly breakout we saw, and I'm expecting a continuation move to the upside, and the target zone I have is here, up here, 186, 188, somewhere around here. This should be the target of the actual up move that we see in the moment. So this is quite nice. What I also like is earnings. I've been here in the beginning of May. This was earnings date, 5th of May, and we see this down gap. Even though we had really good earnings, we see the market gap down. We have a continuation candle here. It was a very weak close, and that's the lowest point we can get after the earnings. And now there was something like a sideways consolidation. Afterwards, we had this breakout here. This was, I think, Thursday last week. We had this first breakout above this important level already, and we had the breakout above the high before the earnings. And so this is a very important zone for the stock, and I like the movement we saw on Friday, really bullish, really strong. So I'm expecting continuation move to the upside with a price target around 186. So that's so far for ALB. So let's take a look at NEO. What's important in terms of NEO is what we can see here. I do have the market performance of NEO. For the last 7 days, it was up 8.6%. And over the last year, we have a run of 650% in the stock. This compared to the overall market and compared to the auto sector itself. It's a big outperformance of NEO. So the stock actually is very, very strong compared to the overall market. And the reason is we have a big forecast for annual earnings growth and also for annual revenue growth for NIO company. So the earnings should grow by 74.2% each year. This is what analysts expect. You have to compare this to the whole industry that's expected to grow around 33% each year. So this is more than double from that what we can expect from the overall industry. And because we still have these big annual earnings growth forecasts, we can expect the company or we can expect the share to move better than the overall market actually. So in terms of the chart, well, monthly chart does not make too much sense because it's only trading since end of 2018, but what we can see is big momentum in the stock and now something like a bull flag in the monthly chart. If you take a look at the webinar we held around 3 weeks ago, we had a similar situation in gold. Bull flag on the monthly chart, and what gold did afterwards was break out to the upside and move to the last high. So that's the move that I would expect from NIO as well from just looking at the monthly chart. We do have a big momentum in the market. We have a nice retracement, bull flag, and I expect continuation in the market. Also, we saw the last month was like a bull candle. So this is like a bullish hammer here, something like a pin bar. We made a lower low, but directly after the lower low, buyers stepped in and brought the price up to nearly where it started. So this is bullish actually. And on Friday, we already saw the breakout above this monthly bullish candle. So let's take a look at the smaller time frame. Weekly chart. What we have here is earnings. After the earnings, we had a retracement here. For 3 weeks, price was moving to the downside, and last week it conquered the 10 weeks moving average again. So this is bullish actually. That's the first bullish sign that this correction might be over. Quite a big correction in terms of percentages. If you take a look here, this correction is more than 50% correction. Really big. I also like this buying zone down here. I hoped that the stock would reach this buying zone, but it didn't. The price turned around a little bit before reaching the perfect buy zone. It was just something like a gap close down here. Here we have an open gap, or we had an open gap, and 4 weeks ago the price closed this gap, and then the current up move began. On the daily chart, what we see here, I really like that. We have a good level for a possible entry. We do have a bull flag here on the daily chart. We have this very important last high here. So if we take a look at the running down sequences, this was like the big sequences, this one here. So big downwards trend. And we are above the 50-day moving average. We are above the 200-day moving average. That's the gray line here. And we are in the process of breaking out above this last high in the market. So traders who are a little bit more aggressive could trade the breakout from this bull flag directly. You could also wait until the market closes above 43.22. That's the last high here, 43.22. But this would be the last possible point for a long entry as far as I'm concerned. So what I'm expecting afterwards might be a little retracement up to down to this level here to test the last high, and then keep on moving to the upside. Price target, of course, somewhere up here. somewhere in this region between 63 and 67 dollars. So similar situation as in ALB. After the earnings, we saw the market move to the downside, and now it reconquers the earnings level, builds a bull flag around this level, and a breakout would be very, very bullish as far as I'm concerned. Okay. Yeah, that's it so far from my side. ALB and NEO are the two stocks that I do have on my watch list for this upcoming week. And well, I guess I move over to Gilbert. Gilbert, are you ready to show you what you got for this week?
Yes, I'm ready.
Cool, then I'm sending the screen over to you. Okay, you have it. Great.
Good. Okay. Yes. Yeah, quite interesting, Martin. I have on my list today, let's see how the time works out. I will go into Costco, Wholesale Corporation, and AIZ. This is Assurant Inc. And if I will have time enough, I will have a little look into silver. Good. Okay. So I will just start with Costco, switching off my cam. And what do I see here? I just keep it technically today. Let's get into the month with Costco. And we see, of course, like most of the other US stocks, they are just high flying, they are rocketing, and yeah, we just see it's going up and up and up. Quite interesting also how it worked in the history. So good entries on a monthly base on different levels at the SMA 20, and here also at the SMA 8. This was also a good possibility to get an idea on a monthly base. Of course, entering into a stock on a monthly base is not really that what should be the preferred case because of risks and risk calculation and everything like this. So, but what did you see here? And this is why I also like it, because we were, as you see here, we were always in the high climatic zone of Costco for a very long time, but we had a good correction here back to the SMA 20 and then a very strong reaction out of it. So we get support from the month, and we already corrected back into the neutral zone with at least with the lows, even it did not really show up here on the climatic indicator because I'm taking always the median of the candle to calculate this climatic distance. Get into the week. What do we see here? Yeah, good correction here back. Here we also, I'm just showing the monthly SMA 20 that we see, how it worked out here. So we closed a little bit below the SMA 20, but we had just immediately had the reaction up and back into this zone now. Now we, of course, we are heading so here we are, a resistance zone of the previous highs. But what I'm liking here on that is that we are correcting, the market corrected. It did not get really rejected. We saw some resistance reactions here with these two candles on the weekly base. But here, and this is why it came into my list, we see now here the signal out of the SMA 20, the so-called 8 train. And this is why it came into my list. So what is now on a daily base? What should be done here? We see the strong up move. We see this sideways correction, but not really, it was not a sharp correction back. So it's rather triangle, yes, but I like this formation here, that it really got strong in this area, and we see that the market is really continuing here at this price, and I expect basically on that breakout within the next days. Maybe we are getting a short correction back here. The ideal case would be that market maybe jumps up here, makes a false breakout, comes back to the SMA 20, and from this here the final jump out could occur. So this would be the best scenario. Why the best scenario? Just for this reason, again, risk calculation. If we are getting in here with a maybe tiny candle, of course now in the moment it would look like this. Okay, what is the target would also be interesting. Where could we set the target? So what I'm doing in such a case where I'm not quite sure where the market could go, I'm just taking the distance of the last low, measure it up, say, okay, this is approximately the zone, and then just taking it, moving it over here to the last low, and this could be about 460, 465. Could be a good target for that. So let's just move up this, and let's see what is interesting. Why currently you would do the following thing, because here we now are on a weekly chart, or the risk calculation would need to be done on a weekly chart, so that we see here we are taking this candle on the weekly chart, and there we would get 80 shares with a risk of a little bit more than $1,000. So we're already a little bit over our risk here, and we could get somehow a target of $6,000. If the market would correct, and this is why I'm saying this would be the preferable case, and we could get into such a candle like this here, again with a risk of $1,000, you see the difference. It's more than the double to wait for a candle, a correction, then a retracement, a single bar retracement or double bar retracement at the SMA 20 or maybe at the SMA 8, wherever the reaction comes out here, and this would make the profit, the possible profit, would try just quite more than double it with such a scenario. So this is however it works out. So basically I'm waiting for the breakout. I'm here then waiting for a correction, and then it would be quite good time to enter this market. Okay, so this was cost. Let's get into AIZ. So this is Assurant Inc. Basically, it's almost a twin of cost. We also see on a monthly base, and even here I like this. I see quite much potential here on the monthly base, because what this here, and this is very rarely, what happened here is that we had basically here the other one. So this sideways corrections, basically this crisscross around the SMA 20. So we see it here on a monthly basis, and this happens quite rarely. And we also again here crisscross. It comes up here. We had on the last highs here a reaction back, and now we are at the SMA 20 on the monthly base, and this is the so-called trampoline. So this is the trampoline pattern. This is always a sign that this, or quite often a sign that these previous highs are getting broken. And so we're getting quite a good support out of the monthly chart. On a weekly chart, also why it came onto my list was that we see exactly here this reaction out of the monthly SMA 20. We went up here, sideways correction. The H train signal here, this is why it showed up on my list, so we're getting support on a weekly base also with a H train pattern. So what needs to be done here on the daily? Again, we see a long up move. Now it started to go into the side. What I would, for me, I would have preferred it if we would have seen somewhere a reaction here on the outer Bollinger's, but it seems that this is so strong that it just corrected. Now we see this crisscross again, correcting back on the previous highs. Now this for me is also a trampoline where we are able to get out to break these previous highs. But in this case, I would not wait, because we are, and this is also something what we also should look like, also the ATR, so basically the average true range is quite, let's say, in a phase where we don't have too many long candles, and there I would say, okay, I cannot expect tighter candles here at this phase. I do not want to wait too long, and this is why I would even, or I'm not would, I do it. I'm getting in here on this price here, because I expect now really the breakout from this candle here above this highs. Where could it go? Again, from the latest low here, just projecting it maybe from here, from the last low here, and it could go to up to 190, 192, something like this. This could be a reasonable target to move it up here, something into this area. Yes. That's from my side. I'm done. Maybe if I have time later on, I could make a short switch into silver if there is any more time. But basically, I'm done. I would say let's switch over to Rudi.
Awesome. Thanks a lot. And until you're switching the screen to me, I can just introduce what I'm talking about today. I just want to introduce a currency pair in this case, because we heard so many nice stock ideas. I think it's worth to have a look at the FX market, the currencies as well. Today it's Australian dollar against US dollar, and I see there a really nice opportunity. Let me switch to my screen so that I can share it with you. Give me 1 second. And so that you have the full picture, I will turn off my camera so it's easier for you to follow what I'm talking about. Okay, what I'm talking about is, first of all, let's have a glance of the overall picture here. The weekly chart, we could see that from March 2020, we had a really big push forward here to the upside. This is a bullish trend, and it's still can continue, but this is something some people are a little bit afraid. What is this? So that's the reason why I'm always checking several time frames. For example, here the weekly chart, here the daily chart. So what you can see here is exactly what you can see here, but in a higher resolution, because it's a daily candle pattern or bar pattern in this case. So what we had from the highest point here was an ABC pattern to the downside, and something starting from here. And with the first glance here, you can see it looks a little bit like a bullish, quite bullish pattern. It is an impulsive move. You can see we had a push forward, we had a break in the middle. Let's check it again. So we had a breather here, and we had another break here in the market. Between, we had a strong move after that, and before we had some strong moves. So this is looking like a typical 5-wave pattern, and this is something I really like. because this is indicating that this is the strong bull market, especially as long as we don't have overlappings here. In this case, it is a tight decision, but it's not really an overlapping here. So I definitely would say this is not a corrective pattern what we saw here in the first part. From that point here, we had a down move. And if you have a closer look at this, it's exactly what you can see on a 4-hourly chart. And in the 4-hourly chart, it's quite easy to understand that this is definitely nothing impulsive. This is definitely something corrective. So if this is corrective patterns are normally counter trend patterns. And we said before that this is something like a 1, 2, 3, 4, 5 pattern to the upside. We have the impulsive move, the typical trend direction to the upside. We have a corrective pattern, a counter trend movement to the downside. What I expect after something like this is that the market will continue the bullish mood at least once more. So that's exactly what I'm expecting. It's not necessarily that the outcome needs to be the same size, the same shape. It can be bigger. Sometimes it's even smaller and can be a little bit more like an ending pattern or something like this. But this is something really, really typical. And normally as a trader, I'm focused on things typically should happen. And I'm stopping untypical situations. So in this case, my suggestion is that this market has a continuation to the upside. How do we trade this? It's quite easy. I zoom it up a little bit for you. We have a last low here. We had this, the previous low here, and the high in between is a possible trigger for the bull market to continue. So what I normally expect is when the market is going through this horizontal line, we can expect something, let's say, similar. Not necessarily the same slope. It can be a little bit slower. It can be a little bit more wacky, whatever. But in any case, I would expect something reaching the 100% target, which is funnily really nice in the same level like the old high we have here. And typically markets love to overshoot at least a little bit. So I'm quite not sure is a tough word in trading, but I think the chances are really, really nice that we will reach this level. Maybe we will continue after that, but that's not given by now. But this is something I definitely would expect that the market will continue here to the upside. Trigger like this. This is the intermediate high from 1st or 2nd of June. You will easily find that in your own screen. But that's a typical trigger for us. Our stop, it can be definitely below this point here, because if we want to break through this point here, we don't want to have any lower points here as well. But on the other side, we can skip, like I told you last week, we can move our stop initially to the 78.6% level, because the probability of being stopped here or being stopped below that low is roughly the same, but you can save this amount of money. In this case, let's use some orders to make it sure. You can see the difference. Although it's only a little bit, you can see the raw trading idea is exactly like this. Let me take away this drawing. So entering here, stopping here initially, and then here. But we don't use this stop. We use this stop, and you can see this changes $600 in this case, or euro or dollar, whatever you invest, depends on what currency you're investing for the next trade. But you can easily see this small amount here is giving us a really nice extra on profit. So that's what we like to do. And you can fine-tune this trade because we have a really nice situation on the lower time frame. What would you expect when the market is doing what we expect here? We would expect that the market is doing some 5-wave pattern, and these 5-wave patterns are internally also 5-wave patterns. So the first one should be something like an impulsive move, and that's exactly what we got here in a 50-minute chart. You can see we had a break here, moving, a break here, moving. So if you don't like this trading idea, if you want to fine-tune this in a lower time frame, for example, to save some money, to have tighter stops, for increasing your position size, for example, you can wait for the next setback here as well. What would you expect? Something like an ABC or something like a shaky movement? And yes, you're absolutely right. It's exactly the same like we had here. just on a lower time frame. When you have this here as well, you can of course say, okay, this is my trigger for entering long. My stop is the 78.6 Fibonacci retracement, like I've shown this before, but on this lower time frame. But in this case, you can say, hey, when moving forward here into this direction, we don't need to rely on only the one-on-one projection. We can, of course, keep the position running until the overall target here, because the small picture is leading into the big picture in this case, as far as I see it at least. So I think we have a good opportunity. If this occurs here, if we have some kind of setbacks here, some corrective patterns, that we even can do this on a lower time frame with a big picture targets here as well. So that's it from Aussie against US dollar. I have another one, and this is in this case a stock. It's Edwards Lifesciences. And you know that I'm not looking at all these fundamental data. Forgive me, I'm not looking at this. I'm just a chart technical analyst, so I'm not checking the data. I'm checking the opinion of all the market participants, and I think I can see them in the market. So as long as the market is pushing here forward like this is a good indication. Something like this here, for example, this is a good indication. But when the market is coming down in a shaky way, like here in the ABC pattern, for example, it's exactly the same idea behind all this, like we've seen in the currencies. When you have something like this, you can, of course, guess, okay, I think we have a good opportunity that this will continue to the upside again. And also here you have some kind of a trigger. Just to make it easy, you can have the last one, you can have the previous one, the high in between is the trigger for that. And you can estimate at least the minimum target, like a one-on-one projection here, the same like we have here, the same again on this side, and the same with the stops, for example. It's easy as it is. It's just when triggered, take the 78.6% Fibonacci retracement here for your initial stop. Of course, I did not mention any kind of a trailing stop. You should apply maybe some kind of a trailing stop. You can use something like a super trend, for example, just following whenever the market is really trendy. It's not perfect, of course, but if you like it easy, and if you don't want to spend too much time on this, you can just trail a stop and see, okay, this seems to work. If you have a trend situation, this is very often fitting quite well. If you're not sure which one to choose, you can just change the numbers here. Maybe your numbers are a little bit different depending on what you prefer. But roughly you can check how does it look with the hourly bar, for example. Pump it up a little bit. So you can see, no, this is not really good because some setbacks here would stop you out. Also here, some setbacks would stop you out. But to keep it easy, for example, you can use a 4-hourly chart. This is not a typical time frame for stocks, but on the other side, this means that you have roughly two times a day where you have to trail your stop. It's quite easy to handle. And in this case, it seems to work. If you prefer, for example, the daily base, it's also working. But of course, maybe the distance is a little bit higher. So you might choose what is easier for you. I'm playing around with these numbers a little bit to stay close enough, but to allow enough for some kind of setbacks or corrective patterns here as well. So you can see it's quite easy. Both are for the long direction. Of course, you can find many of these also into the down direction if you prefer some shorts. And I recommend do this with some longs, with some short positions, so that you are prepared for all market direction. We never know what is coming next, but in both cases here, as long as we are triggered, I have a good opportunity or a good opinion that this market is pushing forward. So these are my both stocks and currencies for today. And I'm switching to, I guess it's Mike.
Yes, you are right. Good to have in mind. Great. Yeah, as long as you hand the monitor to me, I switch on the camera, and so that our listeners can see me one more time today back. And I will talk about the target corporation and Triple D, the 3D system, the 3D printer. So we have just to switch over the monitor. I take the moderation. Perfect. Thank you for this. And now I will give you the view to my monitor, and I will switch off my camera so that we have the complete focus to the chart. First, I will start with the target corporation. Gilbert was talking about one of the competitors from TGD. I have no numbers at the moment for TGD. It's just a strength signal here in this chart. TGD is from the chart right here much more strong, one of the strongest stock in. If you have the time, just switch over to the group and check the competitors. TGD, and when you see the rally over here, this is a weekly chart. Here in this chart we had the lows over here 2017 near the $50 mark, and now you have to pay to own one stock 230. You see this brilliant rally that the stock has in history, and it must not be over. This is a good sign. Why must it not be over? The chart is extremely strong. We see quite bullish signals on the all-time highs every time. When the stock has written a new all-time high, we could be evidence to see more and more increasing prices. That means the market is willing to buy, to pay higher prices. The volume is also good, and so this is the reason to have a look to TGT. And weekly chart, it's also in the daily chart, and you could see the breakout from this flag over here, quite bullish flag after the strong momentum move over here. Was a breakout on Friday, and this is quite good sign. And maybe we will see some reversal movements down to the breakout level, or maybe a bit below toward the $226 roundabout. It's everything fine with this pattern here, but I expect much more buying interest. When you see to the targets of the analysts, you can see targets between 250 and 260 US dollars. That means there's some room for the case that the market stays strong. That means in this case, when we want to see more buying power on increasing prices, you should see prices above the high from Friday. That means a long trade would be able for me above the 231.70, and with the target range over here, I have marked it over here round about the 250 US dollar in long term. That means in short term we can see the market, it's not quite sure that we run through, but for the case that we run through, we should wait here with a stop limit order at 231.70 till 75, and this is the chance for us, and we can, if you like, to make a short-term trade of it, you should have a stop limit over here round about below the lows of this high flag, and this is the area round about the 225 US dollar. This is quite short term. Why stop over here when this bullish pattern will be sold? It's definitive bad news for the markets, and we should expect lower lows. That means we should see here, and the last breakout is quite far away. Here it's around about 215 to 217 US dollar. This is the next one, and when you're looking for the next support level, you have to look here in this area. Let me show this here. This one is the next support, and when you have this here at 230 and have your next support here at 203, it makes sense for your risk return reward. What you have here, you should limit your risk. You can buy back the stock when it's coming down. That means maybe we see something like this here, and you have the chance, the opportunity prices. It's all fine, but the chance is, of course, here to see prices above this Friday high, and when we see this, we will have the opportunity to go up towards 250. So it's all fine here. Prices above the Friday's high are buy signal for the breakout here. It's a confirmed out. Otherwise, you just have to hold your feet unmoved, and that's it, what you have to do. This is my view to TGD, and the second one is one of my older favorites from histories. It's 3D systems. The 3D printing systems are quite important for our futures because of it's quite easy to build parts, replacement parts, and so on. All you have in mind, you can print with 3D printing systems, and not only plastic or metals. We are also able to print food and medication stuff. So we have a lot of opportunities. But when it comes back to 3D systems, situation for me at the moment, because the market came pretty sharp down from the high here. It was the high in February this year, over $56, and we came quite sharp down here in the low to round about 1750. It's quite bearish, this pattern over here, but we have a chance to move above this resistance level over here. The 34 is the latest correction high over here. You see this is the chart, but you can market here. It was a support level, and from it's a resistance level, and you could see this over here. It was a bullish move up to this level, and now we're coming down. This is an outside bar, and when we break through not through, below around about 2860, it's a pretty strong short signal. Even when you have a look to the weekly chart, you will see what I have in mind over here. You see this candle. This is a selling candle in the weekly chart, and this indicates us the correction might be over. You have here, and when we break through this channel, you might see here this 1 to 3 going down to the low that we have here, round about the 17, and this is a quite bearish signal over here. But the situation where the stock is at the moment is not only bearish, it can be bullish too. Why? We have a trend over here. The smallest one is here, this one. I hope you can see this. This is the smallest, and this trend is not yet broken. It's broken with prices 28. What's the low over here? But between 28, no, yet around about 28.70. Then is this trend. As long as this trend is still strong, we will have the opportunity to cross above this level over here and attack the next level, and the next level is this. Is what here the resistance level at the 40 is there, and when you are a short-term trader, you may be able to speculate about this break above this resistance level over here. Trend continuation, target would be the 40. This is my view to the 3D systems today. Just two technical related trades, not so much fundamental stuff, but I think sometimes the technical trades are also very important and interesting for you to see. So that's my view to the point, and I will hand over the monitor to Gilbert, and Gilbert will talk a little bit about the silver chart. Is it right?
Right, yes. We have some time left, so I can...
Yes, we do. 7 minutes.
Take over. Just going a little bit into silver. Yes, just to switch on a little bit the camera. Good. Not too long, because the chart is more important than me. Yeah, silver, a very interesting asset. Yes, the gold of the poor man, but it isn't basically. It's very interesting in the moment. I'm just switching on my camera, and let's analyze it a little bit, what's going on a monthly base. The month was in the past. We see we had here the previous highs went up to almost $50 in the past. We know it. We had a long down phase. Now it went into the side, and from this moment on here in March 2020, it started to get back into some higher prices again. It was a sharp up move, now it went into the side, and I would say from the monthly point of view, it's not the most interesting asset in terms of location point. But yes, anyway, we see here a correction back to the SMA 8. We went up here, we got rejected, this breakout back to SMA 8, and now out of the SMA 8 there is also somehow a up move or a reaction. I'm not quite sure how it works, because I would say there is a potential to get the correction back to 23, something like this in the next month, but I think this potential is rather low. Let's have a look into the week, and this is why I basically like this much more. Silver. Again, we see the up move here, back. Here we see this crisscross up here and back, and this candle, this seems interesting to me. So that means we have again this crisscross around the SMA 20, and we get a reaction here on the SMA 8. So basically this could be a good indication, a good point to get into silver at this moment. Breaking these highs, the previous ones. Of course, it would have been better to see, or it would be better to see a candle here around this price and a reversal. Then we really had a clean trampoline on a weekly base. Let's get into the day. On the day we are getting a signal, the stairway, where we had some good moves in the past, also this one here. But in the moment, of course, there are some signals which are not working out. Here we have a stairway into the short direction, but this it seems it gets rejected because we immediately got another one into the long direction. And this happens sometimes. So basically the reaction out of this stairway into the short direction went down here, but now we see that the market is gonna get strong. So what should we do with the silver? I'm waiting exactly, because here I do not want to get in. I would have to set my stop, my entry at the high of this candle, and of course of the low of this candle, and this is not what I would like to do because of risk management and so on. So this would be quite a wide entry with high risk and a low order size. So what I'm waiting here for is that the market comes up, makes a correction back here somewhere around this price here at around 727,955, and so of course if the market comes up here, because here we see that the day's candle is basically hanging on the SMA 8, got rejected here for the moment, but of course this can change any time. So this would be the case where I say this is a long scenario for me if I'm seeing this candle. If the market is changing, because here we are really, from my point of view, in a phase where also the market could get back to the SMA 20 of the weekly or even at the monthly. So if the market would go down here into this direction, would continue here, of course, then there would be again the same constellation. If we are bouncing back from here somewhere and get a candle at around here with a top tail, then of course the market could also go down into this direction, because the monthly chart is not really the 100% preferable constellation for me, but I would say also looking at gold is gets strong, and silver is the little brother of gold, so I guess that it will follow also the gold chart, and we will have the possibility here to really see a breakout through these levels, and with a possibility, if it really works out, again measuring this distance up here, take this one and measure it up here, so there could be a move in the next time up to $32, something around this. Okay, that's it from my side. Mike.
Yes, so I'm back, and I'm here to thank you guys for your time, and thank you to all of our listeners for the time here on this Monday afternoon in Germany and Monday morning in USA. I hope you enjoyed it, got some information for your own trading, and how I always say in my trading shows, make a plan, trade your plan, and the success will come to you. Will I say goodbye until next week, Monday, 2 o'clock a.m. in Germany. I'm not really sure what's for you in USA. I think it's 8 o'clock or so, but have it on mind. You have the link to join the webinar, and see you next time. Bye-bye.
Bye-bye.